Welcome everybody. Thank you so much for joining our webinar on the intersection of racial justice and climate justice, in particular looking at industrial agriculture. For those of you who don't know me, I'm Iris Brilliant. I am a social justice strategist here representing RISE. We have Rachel Robasciotti, who's going to be doing a short presentation, as well as Gopal. We're really excited to have her. His expertise on industrial agriculture, ways in which it contributes to climate change and so many other things. So welcome. And I'm just going to quickly orient you to RISE. I know a lot of you, this is your first event with RISE, and for some of you, this is maybe your 10th event. So RISE stands for Return on Investments in Social Equity. We offer an investing portfolio through focused on publicly traded companies that are screened through the lens of different social justice issue areas. We're housed at Robasciotti and Philipson, which is a queer women-owned wealth management firm in San Francisco, which has roughly 150 million under management. Yeah, and growing. And in addition to offering the most robust screens, especially through the lens of racial justice, we also have developed the first ever community developed screen, which means we create avenues such as this webinar, online polls, in-person meetings and forums to solicit input from different community members on how we should approach managing our investments, which is incredibly unique for the finance industry. Unfortunately, we really believe that decision-making power should be available to people beyond just investors, beyond investment managers. We want organizers, activists, and folks of all class backgrounds to get to weigh in. So we're really glad that you joined. And then a couple other things. So the context of this webinar is that this is a part 3. Most of you have not been at part 1 and part 2. Don't worry about it. We will update you. Essentially, what happened was the RISE community expressed interest in deepening our commitment to climate justice through a lens of race in particular, and really bridging these two movements, which are actually deeply connected with one another, and looking at ways that we as investors can step up our game in terms of supporting those movements to succeed. So the first forum we had was last spring. We invited in a panel of different climate justice organizers who work at the intersection of race and climate and many other intersections as well. In that forum, we heard a lot of different ideas about what we as RISE can do to more meaningfully participate in those movements. And one of the many great ideas that was put out there that really took hold was looking more critically at the industry of industrial agriculture and examining ways in which we can step up our level of rigor in terms of weeding out corporations that are participating in that industry, and also just learning together as a community. So then fast forward to our second forum, which happened a couple months ago, for those of you who weren't there, where we learned together about industrial agriculture and how it contributes to climate change. And we explored the possibility of divesting from that industry entirely, and the community decided not to, but asked a lot of really great questions that I and no one else on our staff was able to answer, because we are not experts. And thank God we have people like Gopal who can help us about more of the nitty gritty of different aspects of this really big industry and ways that we might divest in a more nuanced fashion. So that's what brings us here today. This webinar is really a response to that last forum. One thing I want to really underscore is that what's very unique about us as well at RISE is that we work by consensus. So even though this is a webinar, perhaps it's more of a detached way of, you might, perhaps you're multitasking and looking at your email while also here, hopefully not. I want to flag that we're going to be asking for your participation. So the flow of this agenda is that you'll get to hear from Gopal, you'll get to hear from Rachel, and then we're going to have I think we're going to have a group conversation if we can figure out the logistics of doing that. And we're going to want each one of you to weigh in on different proposals that we'll give moving forward so that we can truly have a consensus process. Full transparency, I don't think we've done consensus over webinar before. Is that true, Rachel?
That's true. It's a new adventure.
So we'll see how it goes. But so I encourage those of you who perhaps were going to be multitasking or slightly tuning us out, hopefully not. But I know how it is. I invite you to consider fully participating and really listening and taking this seriously, both because when we solicit your input and we make decisions based on consensus, we will follow through on what we decide on, and it will impact how we do our investments. Beyond just impacting the RISE portfolio, this also has the potential to impact other investment firms. When we create a new screen on our investments that hasn't been done in the industry, such as a screen around industrial agriculture, we share that broadly with our partners, our colleagues, and other folks that we're connected to who run different investment firms. And we initiate a dialogue about it and share what we're doing. And other people sometimes are motivated by that or inspired by that. So there's a lot of potential here with what we decide to do together. So, and that, you know, another extra reason to fully participate and be engaged. Lastly, if you would like to chat in questions as we go, there's a Q&A box. I don't really know how it works, but it does something. And we're also going to have a little bit of time for Q&A. And then at the end of Gopal's presentation, as I said before, we're going to have time for a long group conversation. So I invite you to bring in your curiosity and your questions as we go along, and we will do our best to answer all of them. We'll repeat the questions for you.
Yeah, great.
Okay, so without further ado, I'm going to pass this over to Rachel, who will help us get situated a little bit more to be able to participate in this call. Over to you, Rachel.
Hi, everybody. So I'm Rachel Robasciotti. I'm the founder and CEO of Robasciotti and Philipson, and also the co-founder of RISE. So just to ground everyone and just highlight a couple of points that Iris already made, we have the first ever community developed investing criteria. And what that means is we have non-financial and financial criteria. As the investment managers, we cover the financial part, but in terms of the part of our portfolio that's intended to do good in the world, that is something that we lean on our very skilled, very diverse community for. And ultimately, we are leaning on the community because we're wanting to align the behavior of publicly traded companies with social justice movements. Sounds like a no-brainer, but honestly, the vast majority of those who are in socially responsible or impact investing don't really have a bridge to speaking with those in social justice movements. So we're being that bridge and creating more of those conversations. And in that process, we want to center the voices of those who are most impacted by systems of oppression, because we know that that's our just transition to a better world. And happy to have you all here. Just want to ground us really quickly and why we work with publicly traded companies. It's often an answer, you know, we should be investing in the regenerative economy, absolutely. But I just kind of wanted to go over why the work that we do specifically, in addition to supporting the regenerative economy, focuses on publicly traded companies and altering their behavior. A couple of years ago, I got rid of my car. I took 5 tons of carbon out of the air. And when investors got together and were able to convince Google to go 100% renewable, they took the equivalent of 1 million tons of carbon, or they took 5 million tons of carbon out of the air every year. And that's the equivalent of 1 million cars. So we know that we all are changing our own behavior to be more aligned with our values. But when we're able to influence publicly traded companies because we own them, in a certain sense, we're putting the public back in publicly traded companies, where we're able to make even larger change. And looking at our theory of change, where this is concerned around publicly traded companies, if there's a spectrum, we lovingly call this the crime to philanthropy scale. If there is a spectrum of what one can do with their money, you can of course give it away on that left side here. That has like a low financial return. One might even say, you know, 0 or a negative financial return, but it has a high social return. On the other end of the spectrum, if you're a company that steals your inputs, like you don't actually pay for the resources that you're using in order to make products or services, you have a low social return but a high financial return. And we often say that, if you steal land and labor, you can be as successful as the United States, because that's a very low cost of doing business. So what we actually want to do is to divest and really educate folks about divesting from everything in this kind of part of the spectrum here, where there are actually unjust things happening. And we want to also give to our partners in social justice work by means of philanthropy, and also giving of our time. And the place that we're working with RISE is specifically around investing and influencing the companies that are in this particular area, the companies that are neutral to doing social good, because those are the ones that are the most open to being influenced. They are the most open to being influenced, and we are able to make tremendous change with every action that we take. And we've had lots of success where that's concerned already. I wanted to just set a little bit of context. We talk about social screens. The social screens are basically just that non-financial investing criteria. And what we did with RISE, to be clear, is that historically the investment manager sets the social screen. So it's basically the investment manager says what it means to invest in a way that is socially responsible. And that's based on what they believe the clients are looking for, or what markets well, or they may even have those values themselves. And what we're doing at RISE is social justice investing, which is we have our investment manager, our social justice organizations and allies, RISE investors, and actually other investment managers within the industry all coming together to build our social screens such that they support the world that we are creating with this particular type of investing that we're doing. And we've, as I said before, had a tremendous amount of success where that's concerned. I feel very good about myself because I stayed within my 5-minute time limit.
You did amazing.
Last minute editing. I'm going to stop sharing my screen. I'm really happy that you're all here and really excited to take all of your questions and have a really lively community discussion about this.
Awesome. I'll pass it over to Gopal.
Oh, and I'll stop my video so we can focus on you, Gopal.
Oh, no, it's all good. Okay, let's start there. Hello, everybody. My name is Gopal Dayaneni. I'm with Movement Generation Justice and Ecology Project. I'm one of the co-founders of the collective, and I'm currently on the planning committee. I'm also, sorry, I was just hitting my timer. I'm also, I work with the ETC group, which is the Action Group on Erosion, Technology, and Concentration. And we look at the social and ecological erosion caused through corporate concentration, particularly in food and agriculture, and the way technology really is an enabling aspect of that. And that's the basis of a lot of what I'm going to share today. Gonna actually, there we go. Sorry, I'm just trying to make my screen a little easier to see. And I'm going to focus on this idea of food chains versus food webs. The food chain is the industrial agricultural food chain, and food webs referring to peasant agriculture, subsistence, food systems, indigenous food systems, which really make up the food web, which is, related to the web of biodiversity, the web of life, the web of cultural diversity. And so that's a little bit about what I'm going to talk about. I'm going to go very quickly, so there'll be lots of gaps, but I'm also going to share lots of resources afterwards that I hope will be helpful to you all. I want to start by saying that this is the kind of cliff notes of your social screen that you all already have around food and agriculture. And I would say that your current criteria are pretty damn good. You're looking at land conservation and habitat loss, soil erosion and degradation, overuse of resources, and the erosion of genetic diversity or the lack of diversity. It's really great that you're having a conversation about the industrial food system and the industrial food chain, because it is implicated in a huge amount of all of these things. And what's not listed here that is actually at the heart of the industrial food system is also the erosion of traditional livelihoods, subsistence livelihoods, indigenous communities, land sovereignty. So some of the core racial and economic justice values that that seem to be at the heart of RISE's thinking are really deeply tied to the industrial food system and the implications of the industrial food system. So I wanted to start by saying you have really good criteria, and in fact, in some ways, the question is now, how can you apply them, or even can you apply them? And that is to say that one thing that's really interesting about the challenge between the industrial food chain and the and peasant food webs is the domain of the publicly traded market, publicly traded companies, is the domain of the industrial food system. And I really struggled to think about, and I'm not sure I'm the right person to ask about, what you could invest in or influence. So my focus is really going to be on the divestment side of the equation, because what's interesting is all of the right answers to the questions of your criteria are in the non-market food system, which is still the predominant food system on the planet, but the non-commoditized food system. And I'll talk a little bit about that in a second, but I just wanted to start there. Okay, my time is moving way faster than I thought. I have a short little video to share. So, and this gives you a little bit of background on the industrial food system. And this is from a little series of videos we made on who will feed us. And this one's about the industrial food system.
Welcome to the industrial food chain. I'm going to show you just how wasteful and expensive it is. Get ready for some math.
I'm ready.
People, the chain calls them consumers, pay $7.5 trillion to the food chain every year. But $3.8 trillion of that food goes to waste. It's either thrown out or overeaten. The chain's food production incurs a lot of social, environmental, and health damages. $4.8 trillion every year, to be precise. This cost is on top of the $7.5 trillion that people pay for food. So get this, the chain's real bill is $12.4 trillion.
Wow, that is 5 times the world's military spending. And wait a second, if you add up all the waste and damages, for every $1 people spend on food they eat and need, it costs us $2 to clean up the chain's mess.
Exactly. The bill for those damages is never really paid. But money isn't the best way to judge the chain's damages. The chain accounts for 90% of agriculture's fossil fuel usage, 75% of the agricultural land, and it uses most of the world's fresh water. Coca-Cola uses as much water every year, directly and indirectly, as 2 billion people use for their personal needs. The chain violates all kinds of human rights to get what they need. Many peasant communities are forced by the industrial chain to abandon their lands and emigrate to cities or labor on the chain's plantations. When people lose their land, they lose their knowledge and their culture. They lose the critical knowledge that the whole world needs to adjust to climate change.
It's terrible that the chain causes all this damage to feed only 30% of the people. But we are so entrenched in this system, isn't it too late to change?
It's a huge challenge. But we've made big changes to our food system before. Let's go see some of the solutions peasants are proposing.
Okay, so in the interest of time, I'm going to skip the credits, but I just wanted to lay out that that sort of basic background on the role of industrial agriculture. To reinforce a really basic and important point is, despite the fact that industrial agriculture and food systems control 70% of the arable land on the planet, they still only feed 30% of the world's population, and are in fact responsible for huge amounts of health disparities, and those are some of the other hidden costs in the food system. A lot of the data I'm gonna skip like deep numbers and go focus on the companies and that are the worst actors and where I think you have the opportunity to make some impact. But we have a report called Plate Tectonics that looks at corporate concentration in the food system, and I'll share that with everybody after it gets vetted. But here are some of the key sectors in the food system that we looked at: seeds, agrochemicals, fertilizers, machinery. You can see retails on here, all the way down to ag commodity traders. And I'm going to talk just about a few of these, but the report covers all of them. And I'm just going to go over a couple real quick. Before I do that, I want to speak to the impact of the food system. This is from the Stockholm Resilience Institute, and it's called the Planetary Boundaries Framework. And it talks about the sort of safe operating space for humanity. It's sort of, it's a pictographic depiction of sort of recent data on where we are in terms of the point at which where humanity is threatened by the erosion of core systems of biospheric integrity. And I want to point out a couple of things. You will notice that the biochemical flows, phosphorus and nitrogen, are at critical levels and are actually a major threat to the ability for communities to survive in place, in home. In fact, the dead zone in the Gulf is the consequence of nitrogen and phosphorus pollution into the Mississippi River that then gets flushed out into the Gulf. The disruption of biochemical flows is primarily from industrial agriculture, synthetic fertilizers and chemicals that are sprayed in monocropped industrial food systems. The industrial agriculture is implicated in the erosion of genetic diversity and also functional diversity. You might have heard of the colony collapse from honeybees. And that's because of the use of one single pollinator that's industrialized, shackled to the food system, and then deployed, and is particularly sensitive to the neonicotinoids in pesticides and herbicides. So, and of course, as you learned before, it's about 50% of greenhouse gas emissions globally. And there's a lot more on here that I could go over, but I'm not going to. But I just wanted to give you that sense of like the industrial food system is implicated not just in climate, but in the larger question of the integrity of the biosphere, which is why La Via Campesina, the largest peasant organization on the planet, several million people, one of their slogans is "Small farmers cool the planet." Okay, I'm going to start with seed, because you can't talk about food systems without talking about seed. And
oh, Gopal, I'm just interrupting you. Is this where we want to pause for questions?
oh, that's a good place to pause for questions.
Great. Rachel, do you want to kick off a short Q&A? And thank you so much for the first part.
Yes, thank you.
No worries.
So, Gopal, for some of us on the call, the idea that racial justice, climate change, and industrialized agriculture are linked, that idea is a brand new one. And I think the video really helped us see that. But I'm wondering, it really helps kind of see like the waste and how it contributes to climate change. But can you make that direct link to racial justice as well, specifically, and kind of between those three?
Well, we can start with the most obvious thing, which is we wouldn't have an industrial food system if we didn't start with enslavement. So the backbone of people think of the Civil Wars being the battle between the industrial North and the agrarian South, and that's not what it was about at all. And it is actually industrialization of the food system and industrialization.
What happened at the last forum, and why we specifically asked Gopal to be here? Yeah, what were the big outstanding questions? So one of the things that came up is a lot of the people in our community had a question about, if we are going to screen out industrial agriculture and also bring into the racial justice investing community this idea that screening out industrial agriculture is supportive of what's at the intersection between the two, what impact does that actually have on low-income communities of color that really depend on the low-cost food that industrialized agriculture can create? And so that was one question that came up. Another question that came up was, are there specific subsections of industrialized agriculture that are causing, the most harm? A lot of us were really surprised to learn that over 50% of carbon emissions are the results of all the activities related to industrialized agriculture. Basically, we could take all of the cars off of the road, and we could all stop many of our activities that kind of add to global warming, and at the end we'd still be sunk if we didn't deal with the issue of industrial agriculture. So I think that also was something that that we had an outstanding question about as well.
We talked about in the last forum, as Gopal was mentioning, the peasant farmer food web. The majority of those farmers who are being negatively impacted, to say the least, by the industrial agriculture system are in the global South and are people of color, and just looking at things through that lens as well.
If you think about whose labor makes up the industrial food system, even in the United States, it's low wage workers of color, primarily immigrant workers on field. In terms of agriculture. And actually, as you walk through the food system, if you look at the processing facilities, if you look at retail, it's one of the I think it's 6 of the 10 worst paying jobs in America are in the food system. And actually, the Food Chain Workers Alliance has done a bunch of research on that. That's just looking at the United States. The vast majority of people on the planet still get their needs met through short chain food exchanges through the peasant food web. And the erosion of that is a threat to indigenous sovereignty, land rights, peasant agriculture. This is true from Africa to Latin America through Asia. So, I mean, for us at Movement Generation, we often point out that social inequity is itself a form of ecological imbalance that inherently results in ecological erosion. So the idea of connecting, like for us, you don't get climate change unless you exploit human labor through racialized capitalism. So that's kind of the place we're starting from. But it's a very good question.
Yeah, thank you for that.
I want to start with seed because I think seed is the most, it's the foundation of the food system, seed and land. We used to talk about the top 10 corporations that control seed, and now we can get it down to down to the top 4 basically. Corporate concentration of seed is the war against biodiversity, and it's not just that industrial agriculture results in a loss of genetic diversity, but through monocropping. It's actually the strategy for corporate concentration is to limit the varieties that are available so that they're easy to control. The 4 biggest seed companies, industrial seed companies, own 2/3 of all commercial seed. So if you want to buy seed, chances are you're buying from these companies. And the merger of Bayer and Monsanto moved them into the top tier of this. If you add the next 2 companies, you get to 70% of the global seed market. And while it is still the case that 80 to 90% of seed is controlled by peasants outside of the market, the concentration and the conglomeration and the alliances between the seed companies is really a big threat to peasant control of seed. So people actually controlling their own seed, which is how we get seed diversity. It's peasants who cultivate the greatest amount of diversity of seed. Okay, you will notice that the very same—
Quick question, can't they just go their separate ways, have the peasant farmers do their thing with seeds, and then, you know, have the industrialized agriculture folks do theirs?
Well, the scale, well, the industrial agricultural food system isn't just trying to hold on to what they have. They're trying to take over the rest of the food system. And they do this in a variety of ways. One is by forcing seed onto communities. So their control of seed has been rising. Also, now that there's such greater consolidation, these corporations are having even greater influence in international trade negotiations, even in domestic governance and rules around what farmers can and can't do. For example, seed saving is getting banned in different places, and seed libraries are even threatened in the United States. These are strategies by industrial agriculture to control more and more of the seed market. So it isn't enough to just let them do their thing, because their thing is actually to take over more and more of the seed and land, and to actually threaten the ability of farmers to cultivate more and more diversity in seed.
That was
So
a
we've
lost question, but thank you.
we've lost varieties of corn, we've lost varieties of rice because of industrial control of seed. We managed to stop terminator seed technology from moving forward, but that's still a big threat. Once that happens, you will have to continually buy seed.
Can you explain what terminator seed is? I want to spend a lot of time, but that was—
yeah. Terminator seed is a genetic engineering of seeds that makes them basically not able to reproduce. It used to be the case that if you have seed, you by definition are in possession of all the future generations of that seed. But with terminator technology, then they don't, you can't actually reproduce the seeds. And so then you are in a constant cycle of buying seed, as opposed to seed being a regenerative resource, which of course, that's its point. That's its purpose. I moved on to agrochemicals just because of time, and you will notice, I'll actually back up and go forward. You will notice that there's only one difference in companies, which is BASF, which is in the agrochemicals sector. This includes, pesticides, herbicides, biocide, bio-life, biocide, death to life. That's what pesticides, herbicides are biocides, they're death to life. And the reason BASF is on this list is because when Bayer and Monsanto merged, they had to spin off some sectors of the company because of antitrust laws. And so they were sold to BASF, which is with whom they have purchasing agreements. And the reason this matters, that seed and agrochemical companies are essentially the same companies, is because now they can engineer seed to be only viable when used with the petrochemicals. So they're trying to consolidate control of the food system, not simply by controlling more of it, but by forcing the seed to be dependent on the pesticides, the fertilizers, the inputs that are required. So that's a huge part of what's happening in the food system, because right now there's been a total erosion of competition in agricultural markets. Folks were interested, I think on the last call I had heard, in synthetic fertilizer companies. And I think this is a really important sector because of the threat to soil integrity, to biodiversity, to waterways, and to living systems. Synthetic fertilizers are, the inputs for the industrial food system. Because the industrial food chain is not a regenerative system, it requires constant new inputs. And those inputs have to come from somewhere. And that's primarily mining of of potassium and phosphorus, which is huge industrial mining operations, or the production of nitrogen from fossil fuels. So synthetic fertilizers are the inputs that you have to constantly put in because you are degrading the soil through the monocultural extraction of calories. And these, by the way, are probably companies that most have never heard of, but and what's interesting about the synthetic fertilizer companies is they actually often operate through conglomerations and associations based on like nitrogen, potash or potassium and phosphorus. So they actually really coordinate very well to control the markets in fertilizers. And they also are acquiring the smaller companies that do things like organic inputs and things like that in order to actually manage those sectors of the market. Folks talked about livestock. I wanted to point out Tyson, the single largest provider of poultry and pork on the planet. I won't go into it too much, but but I'll share the presentation and I have all the notes in the slides. But one thing I did want to note is that the scale of confined animal meat production this protein focused food companies is actually a huge part of the greenhouse gas emissions from agriculture come from confined animal feed operations. And if you actually want to support regenerative meat and dairy production, it's actually about small farmers, small scale food systems. It's the industrial food system that actually erodes our capacity to maintain sustainable animal proteins.
Yeah, this is Rachel. So you mentioned that you were mentioning that Tyson's one of the U.S. companies that's here, that's a publicly traded company. I just wanted to let folks know that while it's not in the RISE portfolio, if you have just a basic S&P 500 type of index fund or exchange traded fund, Tyson will most likely be in there. It's on the S&P 500 list. So you may end up owning it without knowing.
Yeah, and they're also a vertically integrated company in the meat market. That is to say, you can go from animal from the breeding and even the genetic engineering of animals and animal pharmaceuticals all the way through to obviously the grocery store and the marketing. So they're a very big player. 1 out of every 5 pounds of chicken, beef, and pork consumed in the U.S. comes from Tyson. The WH Group is a Hong Kong-based company, and they rose to second place in terms of scale when they acquired Smithfield Foods.
And Gopal, just so you know, 5-minute warning.
Great. I'm going to move really fast now. Okay. Really, if you want to look at the enclosure of the industrial food system, you really need to focus. I think the smart thing to do is to start to focus on the finance side, and that's investors and traders. And these are the top companies in the commodity trading arena. The ones in the red are the ones that are publicly traded. So the others are not publicly traded companies, but Archer Daniel, Midland, Bunge, and Wilmar are all publicly traded. And if you actually, I know that you all have a no palm oil divestment strategy, that would knock out all 3 of these already. So chances are you're already not invested in any of these. But the commodity,
the RISE portfolio is not.
Yeah, because the commodity traders are but this is actually a huge part of what forces the industrial food system. What really makes it not about growing food. because it's actually about the money you can make off of the commodity trading. And the last one I want to speak to, which I think in some ways is the most second most important after seed, is finance. And that's because who will control us, meaning who will control the food system. But the real question to ask is who will control? Because what's happening in the industrial food system is asset management companies are buying up larger and larger shares of more and more of the different players in the food system, and thereby having more and more influence over the direction of these publicly traded companies. They control up to 30% of the shares of all the leading seed and agrochemical firms. And this is, BlackRock, Vanguard, State Street, Fidelity, and Capital Group. I'm just looking at these, but there's several others. And what's happening here is that we think of publicly traded companies as having lots and lots of investors and having that kind, but the more and more they buy up larger and larger interests, the more and more control and influence they have over these companies. And that's become, leading to like horizontal consolidation. Horizontal shareholding is what it's called. Not surprisingly, in highly concentrated markets, competing firms held by the same institutional shareholders have little incentive to actually compete with each other. So it's leading to more and more of these, not just mega mergers and concentrations, but collaborations and across what you would see as competitors, because they're having shared interests. So this is an emerging threat to the food system that I think is really important to consider. Okay. I am going to make a proposal on your divestment strategy. Can I do that now, or should I wait?
That would be excellent. And this is the part where I extra encourage folks to listen in, because this will then guide our group conversation that we'll have and move towards consensus about these decisions. So yes, perfect timing.
So first, I can't say anything about what you should invest in, but I can tell you, if you want to get out of the worst things that do things that are contrary to the values you've outlined, I would start by knocking out the biggest consolidators in seed and agrochemicals, because they control a disproportionate amount of the market and have undue influence. And if you can get others to do it too, and embrace a screen like that, then this idea of going after corporate concentration, because it is in itself, consolidation is in itself a strategy to erode diversity. These would be the companies you go after. Those are the biggest seed companies and the agrochemical companies. Step two, once you've done that, and you can assess how you feel that that's going, and I know that you have to, balance that against, impact and risk tolerance, then I would go after another key sector. And that there's a bunch of ways you can go with this. I think synthetic fertilizer is the smart way to go. It's deeply tied into the fossil fuel industry, so that if you're already doing fossil fuel investment, you really have to divest from synthetic fertilizers, because you're basically just invested in fossil fuels anyway. So that would be the next place to go. And in this, I want to point out that, I say impact and risk tolerance. But when I say risk tolerance, I'm not just talking about financial returns. I think you have to have a much more complex view of risk tolerance. And in that, I want to go back to, I want to remind you of the image of the planetary boundaries. Like, an economy based on extraction faster than the capacity of a living system to regenerate will collapse. You cannot extract from a finite system faster than its capacity to regenerate and get away with it. And in the same way that, BlackRock and Vanguard, they're looking at these very same questions in the same way that, the reinsurance industry is now questioning whether it's going to insure coastal Florida because of climate change. These are going to become threats to the industrial food system as well. So that's one. And then, can we afford the risk of the catastrophic collapse of biological diversity or the catastrophic dumping of nitrogen and into our waterways? So I think how we consider risk also has to be complicated. But you wouldn't necessarily in step 2 have to go after synthetic fertilizers. You could, I'll send you the report that has the research and you can make your assessments. But once you do that, that's step 2. So step 1 is the core, which is seed and synthetic chemicals, agrochemicals. Step 2 is expanding to other sectors. Step 3, I think, if you have the tolerance for it, or step 1, if you have the tolerance for it, it's step 1, is actually divesting from the investors and traders, the financiers, and the commodity traders. And that's, and you may not be invested in any of these because you direct invest, but peasant groups, indigenous communities in North America, as well as around the world, folks fighting BlackRock on palm oil plantation, among other things. So I think taking a stand in alliance with social movements and racial justice movements who are working on, and indigenous movements who are working on these divestment strategies, I think is really important. Awesome. And step 4 is to reflect, repeat, and do it again. And now I'm done.
Perfect timing. Thank you so much, Gopal. This was, I'll pop my video back in, so useful. And before I hand it over back to Rachel for us to have a conversation about questions, comments, concerns that came up in this process, I really want to underscore, yes, this is about this particular list of corporations and the RISE portfolio, and what we choose to do in of itself matters. And like I said in the beginning of the call, in addition to RISE, putting together a screen can have an impact on in the finance industry in general, in other investment firms. So I want us to just remember that as we move into this conversation. Yes, I'll pass it over to you, Rachel.
Wonderful. So I just want to be clear about what's being proposed and our consensus model. So we think that a consensus model is actually very smart. What it allows us to do is to take into account all the possibilities, particularly when people have dissent. So usually the best way to go is for us to put out a proposal and then leave the floor open. If you have dissent or a question about it, so please chime in, and then we can see what we can do either to adjust kind of like what was proposed or come up with something different. So I believe there were a few things that I was hearing from the presentation, a few specific things, and Iris, you can help me clarify these as well. But the first proposal about what we can do at the intersection of racial justice and climate change, where industrial agriculture is concerned, is to divest from the seed companies and the agrochemical and fertilizer. But let's just kind of take one at a time. And there will be a little bit of silence as we're kind of waiting for folks to come forward with questions, affirmations, that's a good way to go.
Yeah, enthusiasm is welcome too.
Yes, that's also true. And unfortunately, we don't have the breakout rooms, so we're relying on you to pipe in via the chat or the Q&A. For a moment, we know
we got to do it from Margot. Awesome. Thanks, Margot.
Wonderful. Thank you.
And we really, if you're feeling shy, if the first time you're joining a RISE program, please know that we really want to hear from everyone. Even if you don't feel like you're an expert on these things, or if you're feeling shy, please still.
It's actually better if you're not, it's better if you're not an expert. Usually those are where the questions come from. And I know that one outstanding question where this is concerned is, so Gopal, you had talked about divesting kind of like from the top companies. And generally the way that the community works is to kind of like divest from something that can be defined. So it would be from all seed companies, all agrochemical companies, as well. Is there a reason why you were just kind of like saying the top 4?
No, actually, I mean, if I had my way, I mean, to be perfectly honest, you divest from all of it. But you know, everything is connected to everything else. So you know, the food system touches every aspect of the markets. But no, I sort of thought like an assets threshold tolerance might be easier. So I didn't realize that sort of like sector compliance system. But quite frankly, when it comes to seed, if you know, like you knock out the top 6, I think that's like, you know, the vast majority. And then so it would be easy to divest from the entire sector. But I would make sure, I do not believe that and this is the thing, there are no publicly traded seed companies that are not part of the problem. So it's an easy one to just like go after the whole sector.
Great.
And we have some, I'm realizing I want to read out the comments since they're just being chatted to the panelists. Margot says, love the screening, makes it a lot easier for us non-finance folks to feel secure about where our money is and love that it sets a precedent. Emily, hi Emily, says, absolutely support, step 1 and all others. Great presentation, go Paul, thanks, excited. Toby asks, how do we know what we are invested in relative to seed and agribusiness? So let's answer that from the RISE perspective. And then if it's a question about investments independent of RISE, we'll follow up with that over email. So maybe, I don't know if Maya if we can unmute Maya, or if Rachel, if you just want to speak to that. We did a little bit of research this morning to speak to how this would directly impact our portfolio. We do have some of these companies that pass through our screens, unfortunately.
Very few, end up passing through our screens. We mostly end up catching them on high carbon emissions, hazardous product creation. Like they end up failing most of our screens. But we do have, let me just look up the notes on that.
We have Mosaic, I think, pass through.
And Mosaic was one of, not of the seed, or was it one of the?
It's a synthetic fertilizer company.
It's a fertilizer. Okay, so we have one. Big one. Synthetic fertilizer. And then the other 2, Iris?
Give me a moment, I'll pull it up really quickly.
Yeah.
I think you mentioned that Yara was one of them. Also a synthetic fertilizer
yes. company. Yarrow. Maya, if you are on and feel inspired to chat to us, we invite you to do that. Maya is more intimately involved with looking at our portfolio than I am.
And Maya chatted in Yara. So we have Yara. There's the lovely Maya.
Yay!
Hi, team. Hi. So we're invested in, so of all of the companies that Gopal mentioned in his presentation, we're invested in 3. Mosaic, which is as he said, a synthetic fertilizer company. Yara is as well. And then a third one that Iris is going to look up for me. What I think is important to Corteva, thank you.
Yeah.
What is interesting to note about that, which is I think just something to know about our portfolios in general and helpful to understand where kind of we sit in RISE, is that all 3 of the companies that we invest in are non-US based companies. And one of the things that is very difficult for us and very difficult for investment managers, and why partnering with organizations like the one that Gopal works with is so important, is because the sustainability data that we use to do a lot of our screening is really not there. And especially outside the United States, it's very, very difficult to get. And so one of the reasons, self-reported, and so one of the reasons that we're really hardly invested in any of these companies, and really we screen out all of the US-based companies, is because there are organizations like Movement Generation who are feeding us that data, but finding that international data is much more difficult. That's one thing I want to say. And it sounds like Gopal, you agree with me there.
Yeah. Which actually, just to say that for the purpose of the presentation, I only listed the top ones, but I can I'll send you, I already told Iris I would do this, I'll send you all the raw data, like the report that goes, a much deeper. And then, and
Oh, I
actually,
want that raw data.
and it tells
I
you
really,
where,
really
it tells
do.
you where, yeah, I shouldn't say raw, it's the report itself, but it's all cited.
It would have a very small effect on the actual Rise investment portfolio if we were to screen out those last remaining companies that we are invested in. I think the larger impact, less about our particular portfolio, is that we would do something that we often do at Rise, which is that we would be helping bring a set of data to our investment colleagues by naming this as a screen around industrial agriculture, naming the companies that are screened out, and kind of creating a data set that some of our colleagues could use to hopefully convince more investors and investment managers to use that data set and screen out those companies. So it's going to have a very small impact on our portfolios.
Data drives change in our industry, and currently the primary source of data for all investors seeking what we call sustainability data is these companies that that accept self-reported, non-third-party verified data from the companies. So,
and one other thing to name too is when we create a screen, should one of these companies that was filtered out for a different social justice violation, should they change a certain policy and then get brought back in, this would prohibit them from then being brought back in, if that makes sense.
Yeah. So if I could name, like in the spirit of that, like there are emerging threats that that the industry is trying to, or emerging strategies that they're trying to deploy in order to get out from being viewed in the negative light. So, for example, on genetically modified organisms, on GMOs, I know you don't necessarily have a GMO screen, but that's not actually doesn't matter, because if you go after seed consolidation and the erosion of diversity through seed, you're going to get all the GMO companies. But what they're investing in now is a new kind of genetic engineering called synthetic biology and gene drives, which, without getting into the details of any of it, they want that to not be viewed as GMOs and regulated in the same way, even though it is manipulation of genes. So that's why I sort of had the reflect and repeat part, because there's some variations that are going to come up. I focused on like where corporate concentration, and by going by sector, the nice thing is it's easier to get things like climate data, because people have done the research on the industrial food system and even broken it down by sector. But when you start to say, what's the climate what's the carbon emission footprint of this company, it's really hard when you're looking at something like Bayer Monsanto.
Right.
Yeah.
I'm just wondering if anybody else wants to chime in. Rajiv, I did see your question. I think maybe we should put it on hold for now about 401k. Let's see if we can get back to that after and just keep focusing on the question about what Rise should do. Does anyone else want to weigh in about your thoughts of this proposal moving forward? And I saw that Kyra wrote that they're a fan of Gopal and movement generation. They were awed by the first Rise event and excited to see how they can contribute to these efforts moving forward. So,
wonderful.
Lovely.
So what we would be doing in the interest of investing at the intersection of racial justice and climate change is really screening out all of the companies, and we'll need to work with your group, Kapal, to get the language correct so that it accurately
Absolutely, yeah.
screens out. But seed companies, agrochemical, and fertilizer.
Synthetic fertilizer.
Synthetic
I would
fertilizer.
definitely start there, and then you can go through the data and decide what other sectors. And I also I just wanted to note, Rajiv made a really good point, which is many of these seed companies are also trying to capture the organic seed market. And I think that that's really important to note that it's the corporate control of seed that erodes the sovereignty of peasants and indigenous peoples and seed dependent peoples, which is really all of us. And that idea of like, you know, have like also recognizing the role of being able to articulate to investors in your screen the role of corporate consolidation in the erosion of biodiversity and right livelihoods. Being able to connect it to things like farmer suicide, for example, is really important. That because people think, you know, that's about debt, and debt is about having to buy inputs, and the price of inputs being controlled by the agricultures.
Yes.
I just want to note that supposedly Iris Brilliant, which was not me, said, "Thank you, Gopal. This is amazing." So, I mean, I agree with her. So appreciate you joining us and for your meaningful work in this space. Question: many folks at the last Rise Forum asked which companies we might invest in if we divest from all these industrial ag monsters. Can you give some examples of the smaller players you mentioned in your presentation?
That's really hard. You're really, I just have to be transparent that you're asking the wrong person. I can't in good conscience tell you that there's anything that's publicly traded in the industrial food system to invest in. And the things that aren't, and it is something I had said earlier, which is there is a battle over, you know, the question of what the future of food will look like. And that the landscape of that struggle is it going to be commoditized, or is it going to be short chain, known chain exchanges in rural communities? So the things that you can invest in are not related to publicly traded companies. And in our conversation, we decided we weren't diving into that at this point. So in the future, if it's useful to share resources on what I think are the right answers, they're not in the realm of what Rise does, but there are things that maybe individuals or groups of individuals might want to consider.
Yeah.
And you can also ask Rajiv.
Yeah, I was about to mention. So divestment is one strategy, and it's true. We are really limited in what we can do right now in terms of publicly traded companies. We would like to see more companies that aren't awful and all of that, but divestment is one strategy. We definitely recommend, especially for those of you who have money to give, to start funding organizations like the ETC group, like Movement Generation, like Thousand Currents. Rajiv is on the call, and the Clean Fund, like Grain.
Yeah.
We will send this to you as a follow-up resource to just lift up these different amazing groups that are actively creating solutions, not just, that are really important to also invest in. So Toby, I see that you also asked this question about investing in groups and organizations trying to correct the problem, especially in supporting peasant farmers and indigenous groups. So we will put.
I'm happy to I'll put together a list of resources for folks, and certainly, I think you mentioned Thousand Currents and Buen Vivir. I think that's a really important one.
Yeah, absolutely.
And I would just say about the Rise portfolio that that as an activist, I've been an activist longer than I've been an investment manager, and we can get so focused on the vision of what we want for the future that, I think that often the present is so unattractive that we can sometimes focus only on the vision for the future. And I think it's very important for us to actually be in that messy middle between, the vision for the future and what is actually happening right now. What's actually happening right now is that publicly traded companies control so much of our lives, and actually divesting and encouraging others to divest from the publicly traded companies has a direct impact and is part of how we move toward a regenerative economy. So it may not be the most attractive, it's not, nearly as fun as investing in the solutions, but divesting and investing like with Rise, who's a leader in racial justice work and in climate change work, is also a lever that we can pull to make change. So I just want to make sure to highlight that.
And I will say that if you are interested in doing sort of investor activism also as part of it, I think there are plenty of investor activist groups who hold those big companies, but then actually, I think there is a strategic value in holding a small amount of stock in some of the middle and small companies that are more susceptible to investor activism and can be leaders in certain aspects of change, setting constraints on what kind of, certain operations, things like that. But the way shareholder activism works now, like
saying that they're making a difference. Yeah.
Making a difference. We don't need to be doing that, like that.
Yeah.
That's
Yeah.
resources better invested in other things.
I'm wondering, just a transparent facilitation moment, Rachel, if you think it's possible for us to move to consensus right now, since there's not
I really wanted to leave enough space because of this format and us not kind of being able to see everyone. I think you're right, though, that we've given it like enough space to hear the questions and the dissent. And I'm not getting anything that seems like it's moving us out of the direction of eliminating these from the portfolio. So I think, yeah, unless there are any final comments, any final dissent. So we're going to move forward with this, and also because we sit at that transitional space where we're talking to investors and we're talking to social justice movements, we actually end up carrying, our voice carries pretty far. So when we bring this to the Racial Justice Investing Coalition and other places, it will be very significant to say, hey, this is actually what's at the intersection of racial justice and climate change. And we can hopefully start to see some movement there and continue working with you on the types of shareholder activism that could be effective.
Great, and I'm also happy to help you all craft some language and some framing language to talk about why you're taking this position that more directly speaks to sort of the racial justice components.
I know different
history
people,
and present.
Sorry.
That's right.
I know people are about to hop off, so just because I see them chatting their goodbyes, so just really quick. Oh my God! First of all, I'm just so excited because I presented something last time and it didn't work, and Gopal did it and it did work. So I'm stoked. Thank you, Gopal, for having a more
sorry, my
achievable
timing wasn't so great.
Proposal. I'm overjoyed that we're doing this. It feels very in alignment with our values.
Yes.
For those of you who joined, we will be sending out a recording of this webinar. It will take us a little while to put that together for compliance purposes. We will also send you resources about investment in terms of philanthropy. We will send you the companies that Gopal mentioned. If you have an investment portfolio not with Rise and you want to make sure, like Rajiv asked, if you have a 401k, if you have other types of investing, you want to make sure that it's not invested in these companies, use this list that we'll send you of these corporations, talk to your financial advisor, and challenge them and ask them to be taken out of your portfolio. And please just spread the word with your community about what you learned in this webinar, and align your money in all ways with fighting the industrial agriculture system. And please especially consider becoming a donor to all the different organizations that were represented on the call. I think that's everything. Rachel, Gopal, last words?
Yeah.
No, thank you for having me. Apologies for the technical difficulties.
No problem.
Happy to have you. Thank you so much.
Oh, and make sure you read the sweet words before you hop off, because people are saying very nice things.
Oh, that's so sweet.
So thank you everyone so much for your amazing attention and stamina to get through the webinar format. And Gopal, thank you for the incredible amount of work you put in to make this presentation happen. So
no worries. I'll share the PowerPoint with you so that you also can have all the notes that are in there as well.
Good.
Great.
Yay! Thanks everybody.
All right. Goodbye.
Bye.